Okay, so here we are inside the client area of FTMO. I currently have two funded accounts. So I have a $100,000 account and I have a $25,000 account, which has been scaled up to $31,250. So FTMO have a thing, if you've received a certain amount of payouts in an account and you've been trading it for a certain amount of time and you've made a certain amount of percentage, they'll actually scale up your account by 25%. So this is what has happened in this account. But yeah, I have two accounts here. So in total, I'm currently funded for $131,250. I'm hoping to be funded for more soon, but this is what I'm funded for at the moment. I only have these accounts about 3 days, I'd say, because for those of you who don't know, with FTMO, every time you receive a payout, they process a new account with new login credentials. So I'm just going to show you. I'm not going to show you all of my previous accounts, but just the last two, even the last two there. As you can see, 11th of October, these same two accounts, I made about 2,700, something like that. I literally made like two trades, one winner, one loser. Made my percentage and just waited my 2 weeks for my profit split and just took the profits. But I think these ones now, I'm just going to try to build these up a bit more. I'm currently up about 3,300 between them. But anyways, as you can see, two of these have profit split dates, meaning they're real accounts. I will go into here and show you. So inside the metrics area here, you can see there's a start date, 12th of October, only 3 days ago. There is no end date and there is a profit split date and a payout ratio. This shows that it's the real account. Free trial accounts or challenge accounts don't have this. So it's a real account. You can see currently at the moment I am $2,500 in profit. You can see this was my big winning trade here. It was 2,940 on this account. On the other account it was around 900, so just under 3,900 for the day. This small loss here was the day before. I got into a trade. I got up a bit late. I got into a trade. I realized that there was actually like big inflation news on later in the day. I decided I didn't want to be in it, to be honest. I just didn't know it was news. So I just closed out at a very small loss of like 0.4%. It was just a small mistake I made, but I'm only human. I make mistakes, but I made it all back and a lot more. So it's okay. This is the trade, GBPUSD. I took it at 9 a.m. in the morning, but it shows up as 11 a.m. in the metrics because it is 2 hours ahead. The time zone is 2 hours ahead on FTMO. Closed out at, it's coming up as 5:55, but it closed out at 3:55. So 6 hours and 54 minutes. So just around 6-7 hours. So 2,950 on this account, around 900 on the other account. And I will be showing you that here. If we go back to the client area, I'm going to show you here on this account, this exact same thing. Start date 12th of October, no end date, profit split date. Now you notice on this one, instead of an 80% payout ratio, it's a 90% payout ratio this time, because I got scaled up. When you get scaled up, they offer a higher payout ratio as well. So instead of keeping 80% of the profits, I keep 90% of the profits on this account, which is obviously very good. But you can see same trades on this one. I'm just up around 800. You can see the same thing, made 922 on this one. Same losses, just small mistake. But between my two accounts, I made about 3,900 for the day, of profit at the moment is like 3,300. So I am going to go over into TradingView now and show you exactly why I took this trade, like the trade I took and why I took it. Okay, here I am over on TradingView. I'm going to be showing you the trade that I took and exactly why I took it. But first I'm going to kind of touch on my trading methodology. So what way I trade and what I look for in the markets. So I trade support and resistance with trending markets. So for those of you who aren't really familiar with support and resistance, is this kind of idea that there are these areas or zones in the market that price tends to respect and move from. You can think of them as turning points if you'd like. So for example, I'm going to mark out this level of support resistance here. So as you can see, this level of support resistance, it's being respected here. It's acting as resistance here. It's resistance because price can't break above this point. So you can see resistance here, 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 here. When price breaks above it, it's acting as support. So when it's under it, it's resistance. When it's above it, it's support. Came down and tested it and used it as support. And now when it came back to it again, use it as support again, broke underneath it, use it as resistance. I'm not going to go too in depth on this. This is just the basic idea of it. Now, I trade trending markets, so I'm a pro trend trader. I go with the trend of the market because I think there is a way higher probability of winning a trade if you're going in the direction of the trend. Because as you can see there, price has been trending to the downside. As you can see, the pullbacks are a lot smaller. The extensions to the downside are a lot bigger. You see this big move down, small pullback up, big move down, small pullback up, big move down, small pullback up, big move down. I think there is a lot higher probability of you winning a trade if you're going in the direction of the trend. So now, how do you identify a trend? You can see it visually, and typically when price is trending to the upside, it's shown by a series of higher highs and higher lows. So here, higher low, higher high, higher low, higher high. Why is this a higher low? Because this low is higher than this low. Why is this a higher high? Because this high is higher than this high. It's the same, it's the opposite when price is trending down. It's a series of lower lows and lower highs. So as you can see here, lower high, lower low, lower high, lower low, lower high. So why is this a lower high? Because this high is lower than this high. Why is this a lower low? Because this low is lower than this low. This is how you really identify a trend. Again, I'm not going to go too deep into this. That will probably be for another video. But this is all I really do. I trade with the trend of the market, and I look for high probability support resistance levels to get in on the trend. So going on to the trade that I took, it's a GBPUSD sell. This is GBPUSD here. Oh, wait now, GBPUSD, I'll get it back up. So GBPUSD, it's a GBPUSD sell. And why I took this trade is fairly simple. Price has been trending bearish for the last few weeks. As you can see visually, price has been trending to the downside. You can see very clear. Price then pulled back up into this major level support resistance. So you can see the large reaction from this zone and this big reaction it has. If you look across, you can see support, resistance, support, support, resistance, resistance. You know, it's a very good support resistance level, very significant move from the zone. So when price came back up to the zone, it came up and gave this huge bearish engulfing from the zone. So what is a bearish engulfing? Why is this an engulfing candle? An engulfing candle means that this body of this candle closed bigger than this body of this candle, which means it engulfed it. This shows that on this trading day there was a lot more selling pressure than this day. Even if you want to look at it this way, it took about 3 or 4 days for price to get up to this zone, and it only took 1 day to push down from here. So when I saw this, I was thinking, okay, I think there's a higher probability that price could continue to trend and continue down from here. So with that being said, I went down to a lower time frame. I went down to a 4-hour time frame and marked off this intraday support resistance level here. As you can see, this level that price used to push up to the upside, it broke it, retested it, and pushed the upside. So now price broke back below this level. So I said, okay, I think it could retest this support resistance level to go down. So I identified this here with this retest here. You can see the wicks here acting as resistance, came all the way up here and rejected and went down. Last time it went below it, it wicked up, retested it, and pushed down. You can even see the rejections here. So not only just this, I saw that in this area there was the 4-hour 50 EMA. I used the 50 EMA, and it acts, I can have seen in the market, it acts as a dynamic level of support and resistance. So as you can see through this whole trend down, it has remained underneath the 50 moving average. When it came up to it last time, it acted as resistance and price rejected the zone. You can see when it came above it, it used it as support and pushed up from here. Even here, as you can see, the trade played out, it rejected here. So I used this as a confidence in my trading. So also with this, this zone was also the hourly 382. People often think that the Fibonacci is some kind of magical indicator or tool or something. It's literally just a tool for measuring the percentage pullback. So on this impulsive move back, this just shows that this pulled back 38.2%. And what I've seen is typically in strong trending markets, price does tend to pull back and reject the 382 level. So for my entry, I entered off this 15-minute pin bar right here. This was my entry signal, as you can see. I'll zoom in. This 15-minute pin bar right here. This is one of my entry signals. It's a rejection candle. It shows that in this 15-minute period, price pushed all the way up to the top and ended up closing all the way back down here, shown by this big wick up here. So this is a rejection candle. This is the point in which I entered the trade. So putting it all together, you have this big daily bearish engulfing right here. This big daily bearish engulfing from this major support and resistance level. You go down and you look at this intraday support and resistance level where you have 4-hour structure, proven support and resistance level, which has the 4-hour EMA, hourly 382, and it's after giving a 15-minute pin bar in the zone. What is the probability that price is going to continue down from this area rather than up? I think there's a higher probability that it's going to continue down. So with that being said, this is where I entered the trade. My stop loss went above my zone at 25 pips. People would ask, oh, why didn't I use a 20 pip stop loss, something smaller? I like to give my trades breathing room, as sometimes price can actually come up deeper into the zone before dropping, because you can't predict the exact price point is going the exact price that it's going to drop from. So I like to give my trade a bit of breathing room. So that is where my stop loss went, above the zone, giving it breathing room. For my take profit, I was targeting the next level of support. So as you can see down here, this is very clearly the next level of support right here. Price came down. Why is it support? Because it's supporting price. Price can't break through this point. So when it respected it here, came down, acted as support here. Last time I rejected this area, it came down and used this area of support. So I was targeting the next level of support, because I do not know if price is going to break through this area or not. But I think there's a high probability that the next level it's going to stop at is this point. And as you can see, it rejected it perfectly. So for this trade, I risked 1% of my account to make a potential 3.5%. So I did not actually close at 3.5%. I closed at 3%, just around 3% at the bottom of this hourly candle after this big move down. Because at this point, it was Friday, it was around 4 o'clock in the day. This is when volume tends to die down. So I just wanted to, it was up 3%. I wanted to take my profits and be done for the day. So as you can see, all I'm kind of doing is I'm kind of identifying high probability zones in the markets where I can get in on the trend and continue down, and I'm targeting the next support and resistance level. This is basically what I'm doing. Obviously, there is a lot more to my strategy. I have my own criteria, I have my own set of rules, my own risk management strategy, but in the most simple terms, this is what I'm doing. So yeah, that pretty much sums up the trade breakdown. I'm going to be making more videos from now on, breaking down my trades, my profits I've made, and potentially going in more depth on my strategy and how I trade. And I'll probably be making some videos on how I've actually got funded and how you can go about getting funded. So if you enjoyed the video, like and subscribe. Thank you for watching, and I'll see you next time.